The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good morning, Money Masters and Treasure Hunters. Welcome to the March 27th wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I am grateful for your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential is what each of us must master each and every day. 3 solutions. When you're spending 95% of your time on solutions, I hope it's not just one solution. It should be 3 solutions. Why? 1 solution is an ultimatum. Ooh, those are no good. 2 solutions, well, that creates a dilemma, either or. But 3 solutions, folks? 3 solutions will provide you with a choice. It could be more than 3. In fact, the more the merrier out there when you're coming up with solutions to your problems. But at least 3, because when you have 3 solutions, you can choose the best solution. You've got a choice, and then what happens? That's right. You take massive action, take massive, determined action. That is how you tackle problems out there. Let's go take a look at the problems in the marketplace out here, which are really the euro. Right now, we've got the Dow trading off 85 points, composite down 20. S&P watch. S&Ps are down $9 right now, trading out at 1554. So they're taking on that 1550 primary trading range level. We know at the 1546.72 level, that is the swing point from October 11, 2007 out there. Russell 2000 down 0.8%. So the Russell 2000, the weakest at the moment, off $8 out at 941.85. You've got Google off $9, Apple off about 8 right now. Behind them, Priceline, Lindsay Corp off $4. To the upside, you've got Netflix up 5, Amazon up 3, AOL up a couple of bucks. If we take a look at what's going on in the metals marketplace, you got gold moving up. It's up $7. That's with the King, which with the U.S. dollar index up 40 plus ticks right now. You've got silver off of its lows. It's only down now 23 cents, trading out at 28.40. Light sweet crude pulling back. It's off 62 pennies right now, out at 95.72. Over in Europe, we'll take a look at the DAX. We didn't do that during the last chart out here, but the DAX, I believe, is breaking through a support level. So we'll go check and see where the next support level is. DAX is off 100 points right now, trading out at 77.79. FTSE's off 40 points, trading out at 63.60. Our call-in number is 877-927-6648. Give us a call. We'd love to take a look at your stock with you. Let's start off by taking a look at the S&P 500 index. If you're watching us on Tiger TV, thanks so much for doing that. Maybe you're listening in on the radio or your mobile device at tfnn.mobi. Remember, this show streams live to you on your smartphones, your smart pads, your smart everything out there. Just go to the homepage of tfnn.com. Over on the right-hand side, you will see the button with 3 little smartphone devices. Click on that. This show streams live, and this is archived on Channel 10 on Tiger TV. So right now we can see the S&P trading out at 1554. Having a nice day up yesterday. We'll take a look at volume. Volume yesterday in the marketplace, basically dismal. I don't know if that was because of the Passover / Good Friday holiday out there. Kind of hard to think that was really what was behind the lack of volume, but not a lot of volume to the upside inside any spot in the marketplace yesterday. This has been really consolidating sideways, this being the S&P 500 ever since it broke above that 1546 level. Did that on March the 8th. So now we are 11, 12 or so trading, maybe more than that, trading sessions in, and really been consolidating between 1546 at the lows and 1563 at the highs. Of course, what we do know is at 1576.09, we expect that the S&P will release some information to us. We'll see if it is going to get up there. It's going to need a big rejection of price today. What's that going to take? Well, that would take a big rejection in the euro. So let's go over to the euro and see what we have going on out here. As we take a look at the euro-U.S. dollar currency pair, we're going to pull up the 30-minute chart out here. What we can see is on that last 30-minute bar, made one of those TD combo 13 counts out there. That's important to note. That oftentimes identifies areas where things are stretched. We take a look at expansions of swing points, A to B equals CD downs. What we do know about these 13 levels, when they're broken, just shows you a really strong trend that is in place, so that's helpful to understand. There are no bulls yet that have really shown up inside the euro currency pair, so let's go take a look at this on the daily chart out here. And see what we have going on inside the daily chart. In the daily chart, you can see it broke through resistance. Of course, we know, broke through support, I should say. It did that 2 trading sessions ago on March the 25th when it closed below that swing point from December the 7th. Now that sets up level 2 of support, and that level 2 of support will take you all the way back to November 13th. I apologize about that. I'll eventually get my eyes working here properly. November 13th, and that low, 126.59 out there. And you can see here on the daily chart, nowhere near the oversold condition, just using that relative strength, relative weakness indicator out here. But I would be paying attention to 2 time frames here right now to try to see if there's going to be any kind of reversal, any kind of bounce to work off the intra-period oversold condition. And that would be taking a look at the 30-minute chart on the euro, and as well, we'll go do the same thing here on the ES Mini. And I think that is what we want to be paying attention to. Why? Because the S&P 500 still wants to go until it gets below that 1546 level. It's sending us all kinds of messages that it wants to go tag that 1576 level. Does it have to do it right now? Does it have to do it this week? No, it doesn't. But it's certainly sending the messages that it wants to do it. The question is going to be just simply when. We want to go take a look at the index futures here. Then we'll go take a look at the other indexes and so forth. But I want to go take a look at the 30-minute chart. So the 2 charts that I'll be paying attention to, the 2 charts that I think that you should also be paying attention to are these 2. And because there is a correlation going on between the 2, inside the ES Mini 30-minute chart, the candle, so this is just picking up from the close of the Trader's Edge show, turned out to have the opportunity. The opportunity for the bulls to take charge was as we were coming into that 10 o'clock session. They could have formed that hammer candle, but instead they did not. The bears still showing you right now. They are in charge of the trading session. What's important to be paying attention to right now is that and this is, we got 30 minutes, so we got another 16 minutes left in this trading session. What is under attack is the last time that we saw the bulls here on this at this level, and that really what I'm talking about is this bull sash candle right here that came in at 8:30 in the morning yesterday. You also had this little morning star configuration. That's a 3-candle pattern named after Oda Nobunaga, one of the 3 great generals. See, 3 always shows up there. In fact, they call it the falling 3 solutions for your problems out there. That is a beautiful thing. You got a 3-candle morning star pattern formed. That is being broken right now. Of course, we still have 15 minutes left in the trading session, but you can see you're up against an area here that should be support. What happens if support breaks? If support breaks, you go to lower price, and support becomes resistance out there. So right now, that is where the battle, we can watch this battle unfold. And why am I waiting for bulls to show up? It's just as simple as this. On the intraday chart, when you are in the oversold territory, what usually happens, what happened the last time that the market was down here in that relative weakness indicator was at 1:30 in the afternoon. That was on March the 25th out there. You saw the bulls show up. They showed up here with a piercing candle. It was the second time they showed a piercing candle right here as well at 12:30, but the bears said, no, we know that you're out there. They trampled over them on that very next candle. Then they formed another piercing candle. They did that here at 1:30. Market moved up higher. That gave you a little shift. You could see the change in trend in the marketplace. The bears tried to take back charge again, and one more piercing candle, and that came in right here at the 4 o'clock close. Then what did the market do? The market went ahead and made a 100% move of a move. Went all the way back up to the swing point that came in at 6:30 in the morning. Of course, what it did was it really worked off that oversold condition. It moved up into the overbought condition, and that's where we see the market had made its highs yesterday, really coming into the close. The actual high was this shooting star out here at 3:30. So what does that set up? It sets up all you have to do is be a bull and a bear trapper. out there. That's all you've got to do. You just have to wait. And now, what I don't know, what you never know, is just to the extent of where price will travel to. It always depends on how quickly. You can see here as the ES Mini was making its move up off of the bottom, and I'm referring to the bottom here of the relative strength area. You can see it was really kind of moving sideways. So as it was moving sideways, it had longer time period in order to be able to reach higher price out there versus if it had made a real straight move up, you would have seen that RSI get up into that 70 level much quicker out here. So right now what we know is no bulls are in charge here inside the ES Mini, and therefore no reason that you would want to go ahead and step in front of this and try to catch this little falling knife out here. But I do suspect we're going to see the bulls show up, and then the question is, then what do you do? So let's continue taking a look at the markets. Let's go over and take a look at, I said we would go take a look at the DAX, so let's go do that here because I believe that should be breaking an area of support, and we'll go identify where the next area is. Yeah, most certainly it is. We can see that was a level of support that was really established by the gap up off of March 5th. The top of that level was right around 78.83. The bottom was March 6th. We can see that level was tested basically 3 times out here over the last 3 trading sessions. That now has been broken. You can see it's now trading into what we're going to call, in essence, level 2 out here. So we're going to take a look at 2 more levels of support inside the DAX. Let's use a black line across the screen here. So you can see the DAX is trading into the gap that was created from March 4th to March 5th out there. That low, 77.72. You're at 77.74 right now. Looks to me more so like the DAX wants to at least come down to what I'm going to call level 3, although I'm not labeling it, just so that we can take a look at those different levels, which really means coming right down into that gap up level from March the 4th. So it looks to me like the target is more like 77.08 inside the DAX. That doesn't mean it's going to drop another 74 points today, but looks to me like that's where its sights are set. Now, an area of support out here should be this entire cluster of swing points, if you will, the lows out here, really that started on February the 6th. If those lows get taken out, what you'll see is no more floors. What you will see is you'll see the DAX move down to the November 16th level post-haste out there. 877-927-6648. Dow's off 95. S&P is off about 11. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Dow off 80 points right now, and let's go peek in on the natural gas contract. I've got the continuous contract out here right now, and I don't know if Dave from Clearwater is listening in. I know he tries to listen in as often as he can in between work, and Dave from Clearwater called back. I remember this. He called back right in the February time frame. Might have called since then as well, but I do remember him calling right around February 19th, and he identified this candle pattern here. This is a very powerful candle, and I believe he asked me about it, and I didn't think that it was going to be the reversal because I was looking at an A to B equals CD down, and I was wrong. He was right. This is this very powerful four candle pattern. I talked earlier about the three river morning star. I'll get it out, don't worry, as well as the evening star candle formation. Is that an important pattern? Well, let's just go over and take a look at the actual indexes itself. And that's why candlesticks, with regard to helping you to read the message of the markets, are really so cool out there. Now, you got to put that with all of the other tools that you use. So it doesn't matter to me what other indicators you might use, but you need to incorporate those with the candlesticks out there. If you do that, you will add to your trading so much. You'll be able to sit back and wait for the bulls to show up. Right now, we've got the bulls trying to show up inside the ES Mini 30, where I said we need to be paying attention to because of knowing that the RSI moving down into the lower levels where we see bounces from, and just wait for the bulls to show up. Just wait for the cavalry to show up, and then you can start beginning your battle out here. Now, if we go take a look at the index, as soon as I can find where my little tab is out here, it should be right in front of the daily indexes. Let's go take a look at the S&P 500 again, and we can see that same four-candle formation right here down at November 16th. Look at that. This is really the same candle formation that we saw back there as we took a look at the natural gas contract. It's right here at the November lows. That same candle pattern formation really right here as well at the June lows here, June 4th. Take a look at that. We know how important that low was. You had the three river morning star right here back in November of 2011. And if I could pull this thing, I don't know if this goes all the way back to, let me see here. Give me a minute. Yeah, so we'll come back to March of 2009 out here, and what you're going to see is that exact same candle pattern right there. Perhaps the most powerful candle pattern signature that I have seen out in the marketplace. So you want to pay attention to it, and I say good call, Dave from Clearwater out there. Better call, quite frankly, than I made in taking a look at that natural gas contract. Let's go take a look at what else we want to? Let's go take a look at gold. Let's go take a look at the metals. Let's go see what gold and silver are doing out here. Then we'll take a look at the currencies. Now, in the case of gold, you can see traveling inside this little wedge pattern here that we've got coming off of the low here on February 21st, that low of 1543. Just using really as my next touch point here. In this, I'm using the lower part of the shadow as opposed to the actual body of the candle. So using my trend, I'm using the low of March 1st at 1586, and then that happens to run into the low here of March the 14th. We can see that the Johnny Cash Basil Chapman 9-day EMA, that's that blue squiggly line on my screen here, with the exception of yesterday's close. Gold has just kind of been dancing along the top of it, and it's getting up there as well. Gold is going to, we'll know whether or not gold is going to break out if it can break this descending tops trend line out here. But I suspect that's where it's headed to before it gives us its next piece of information out there. And the large banks, large commercial traders out there, they are taking net long positions in gold. At least I'll find out, with Friday being Good Friday, I'm not sure when I'll have to look at the CFTC website. They may not release the information until Monday. Maybe they'll do it on Thursday, I'm not sure. But then I'll get an idea for what the large commercials are doing. Let's go take a look at silver here right now before we go to break. Silver coming back and perhaps trying to test the swing point low from March the 1st out there. That had 47,000 contracts. Volume so far today, about 31,000 contracts. So trying to test that area, has not been down to the lows. The lows of that trading session on March the 1st, $27.95. If we go peek in on light sweet crude, see what crude is doing. The crude had made it up to the 0.786 retracement level yesterday. Today's candle here, not a bearish candle whatsoever. Looks to me like light sweet crude is going to make a 100% move of a move at least and head up to $98. 877-927-6648. Dow's off 67. We'll be right back.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of tfnn.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of tfnn.com.
Welcome back, folks. You know, I didn't welcome you to Full Moon Wednesday. The full moon coming in early this morning, I think right around 5 a.m. or so, 5:20, something like that. So it is a full moon Wednesday. If you got bright skies, you should have a nicely lit sky and evening out there. Oftentimes on full moons, we do see reversals in the marketplace out here. If we can put that together with what we're looking at here in the charts, let's go take a look at bonds. We're taking a look at the commodities. Let's leave off with bonds. Bonds, we've been saying, wanted to make their run up to the area of resistance, which was the top of the January 2nd level. That's where we had a gap down in the marketplace. That high was 144.29. Last time that it was up here was back in March of 2012. Today it's up with light volume, 225,000 contracts so far. What it's really going against is about 982,000. So truly up on light volume. If you can't bust it up, what's it going to do? It'll go and try to bust it all the way back down to the lows out here. We can see a nice horizontal line out here. You know, and so this would be a place where you could consider taking a position in the TBT out there. So if you believe that the full moon has anything to do with seeing a market move up, we've had the market move down into it, and you've got bonds up against a resistance level. If you try to correlate the two of those, you'd see bonds pulling back. You'd see the markets moving higher, and the S&P finally going and tagging that 1576 level. Let's go out to Johnson City, Tennessee, to Tim. Tim, thanks for calling. Thanks for holding. How are you today?
Hey, doing well. Haven't talked to you in a few weeks.
Yes, excellent. Glad to hear that you're doing well. What did you want to take a look at, and how can I help you?
I wanted to point something out. I wanted to see if you could stretch the S&P back to, like the late 90s. I just wanted to show you something that might be a possibility.
Yeah, let's see here. Let me
stretch it back maybe like a weekly or monthly. You can even do it on the Wilshire 5000. Anyone?
Well, let's go back on the monthly chart. So the monthly chart, I've got it, no problem.
Go and so connect the draw a line and connect the peak of 2000 to the peak of 2007, and just extend that line to the present.
Yeah, okay. I mean, in essence, I've got that going across the screen, okay.
And now take a line and connect the 2002 lows to the 2000, I guess, 9, what was it, March of 2009 low?
Yeah.
And just extend it to the present.
Yeah. You say that, yeah, okay, gotcha.
You're just connecting the bottoms and the peak, the two bottoms and the two peaks.
Absolutely. So it's been consolidating really all the way since it's been consolidating, quite frankly, since 1996, you could say.
Yeah, what I want to point out was, and this is, I've been looking at this as a possibility since 2011.
Yes.
And, this could be tracing out. I mean, I doubt this will happen, but I'm sure the big bears at home will like this, but this could be an expanding triangle, a very large one after, the 90s, after a big move up.
Yes.
Expanding triangle, which the bottom of 2002, that would be leg A. The peak of 2007 would be leg B. The bottom of 2009 is leg C. And we're approaching leg D up to that resistance of the expanding triangle. And in, I guess, looking at a textbook expanding, we would want leg E, which would go, that would be a severe bear market, but anything goes,
No question. What I've got drawn on my screen here for everybody following along, what you can see, and this is the monthly chart of the S&P 500. So you're taking a look at, in essence, channel lines here. These channel lines showing you price coming off of the highs in 2000 all the way down to lows put in 2002. That was your downtrend channel. And then you've got your uptrend channel as the market went ahead and reversed and moved up into the highs of 2007. Then it makes another downtrend channel into the lows of 2009. Now you can see we're traveling inside the price channel, the rising price channel, and we certainly have made a triple top out here. No question about it. Now, one of the things that we can pay attention to, because it's certainly consistent at tops in anything that we would trade out here, is bearish candles. And inside the S&P 500, we certainly had those. You had this little, piercing candle, bearish engulfing type candle that took place in September of 2000, which helped it. Now, it didn't pick out the top, but what it did was that was the very first time that you really saw any bearish candlesticks out here where bears were trying to take control of the session. The actual top came in right around December 31st, 1999. Out there, and so it actually came in the March 31st, 2000 was the high out there. In the S&P, that was 1552.87. We're at 1556.91 right now. But you did have a bearish candle that helped to indicate, Tim, that the market was suggesting that it wanted to go ahead and at least retrace. In this case here, it pulled all the way back down to the lows of 1996 out here, 97. And then you had a bullish set of candles. In fact, taking a look at the monthly chart out here, I was talking about a four-candle Morningstar pattern. You actually had you had that configuration right here that confirmed in April of 2003. How about that? So thanks for even asking me to pull up the monthly chart out there, because before I was taking... Go ahead.
If you go back to any bottoms, you can really see you could have really nailed the bottom just by using candles and volume.
Yes.
Because, just that peak, the bottom in... because the volume really stands out, and you could really say, this is a bottom. I know when we get down that far, emotions tend to come in play, and you're too fearful to get in. But the candle, like the bottom of, what was it, a piercing candle into the lows of 2009, like on heavy volume?
Yes, absolutely.
I don't
know. No. It did. And what actually was cool about the 2009 lows were, and this is where my suggestion is that what folks do is that the way that to best use the information is in fact to use other patterns and use the candle signals as the trigger. So the S&P was making a 1.272 butterfly pattern as it was coming into the lows, and the trigger, in essence, was the reversal candles that were out there. Monthly candles have more meaning, than weekly and daily and so forth. But even coming right back here in 2009, that monthly candle, that was a piercing candle, no question about it. And that was on the entire move down. I'll just try to expand this out on my chart so those watching on Tiger TV can pay attention to. If you take a look at coming off of the highs in 2008 all the way down, you did not see a single bullish candle until right here, March 31st, 2009, for that month. And you got a piercing candle. And you can see that that's where the bulls were ready to defend their position and put in their foothold out there, and just really never have looked back. So what's missing here from determining whether or not this is a top or not, or whether it's going to be a breakout, is just simply going to be whether or not a bearish candle up at these highs moves in. And we haven't seen, the only last time we saw any on the monthly chart, any real bearish candles out here, was the time period of March, April, and May of 2012. You got this reversal signal out here, this little evening star, I should say, candle formation, and that was the last time that really we saw any kind of real bears out there in the monthly chart for the S&P 500. So that is all that's missing from, and that just means you have to be patient.
Where does that
Likewise,
where does that top trend line hit? I mean, if anything, I think it will be
off of the March 2009 lows. That was the A point, was the low at 666.79. The high was on April the top of April 30th, 2010 at 1219.80, and does just a shallow retracement down into July, which was 1010.91. The 1-to-1 A to B equals CD 1564.99. It's gotten up to 1564.91. That's a beautiful thing out there. That's for sure. But right now,
lack of volume has been the frustrating thing. It's been, that's frustrating a lot of the bears that are looking for a reversal, and I think that just has to do with money printing. Just don't fight the Fed type thing. But I think it's just floating on air up here. But I don't know.
Well, look, the lack of volume, there's no question lack of volume can be frustrating. But what we also do know is, we know how it ends because we can look at chart after chart after chart when things implode. As we take a look at the during the couple hours that I'm on in the morning, we take a look at charts that are imploding right away, and we can always watch them go back to a volume area. So price can keep moving up. Most certainly it can. What we do know is that when it does, if and when it does implode, it'll come back to the last time you saw a volume breakout or a high volume low or something like that. But, low volume, the market can absolutely continue to move up on low volume. Once you're above an area of resistance, it becomes support. It's really kind of simple if you think about it in those terms.
Yeah. Yeah, sometimes volume just doesn't matter. Price does.
Well, I think it eventually matters, but you don't have to let it necessarily frustrate you. Just kind of maybe use some tight stops or something like that.
Right.
All right. So, hey, thanks for calling, and thanks for pointing all that out.
Yeah, I like standing back and looking at the big picture sometimes, try to figure it out. But all right, well, thanks for talking to me.
Oh, my pleasure. Always good to hear your voice. Have a great day.
Talk to you soon.
All righty. So as we come back, folks, you've got the Dow is now off 48 points, so it's off of its lows. Let's go peek in on what I said earlier. Really, today's watch charts out here, and we're taking a look at the euro. So as we take a look at both the euro and the ES mini out here, pointing out that, really in both cases, both of them being in the oversold territory. Again, we're looking at a 30-minute chart, so really looking at a intraday pattern out here. Now, this candle configuration on the 30-minute chart, there are no really bullish candle signals, at least as far as individual candle signals. So what we'll do is we'll go down and take a look at a 10-minute chart out here. On the 10-minute chart, what we do see is we see where the that was on the euro. Meant to also really do that on the ES mini. Give me a second here to do that. I'll pull that up, and we're taking a look at. I've got the euro on the left-hand side of my screen. I've got the U.S. dollar. I've got the ES mini on the right-hand side of my screen. Let me just pull this back a bit here, and what we can see is the very first time that on the 10-minute chart that we see the bulls come in and take charges right here at 10:30. So as we were coming back from our last break, that is a bullish engulfing candle that is out there. So that is where the bulls came in. Not really a bullish candle niche. You stitch things together here on the 30-minute chart. As we take a look here at the 30-minute chart, though, no, 10-minute chart, I'm sorry, on the euro, we also see that same bullish engulfing candle right here also at 10:30. So it's why I said, these are the two charts to be paying attention to with regard to any type of a bounce in the marketplace. Now the question is going to be just to what extent we see a bounce. Was that it? Was that the full moon low that came in essence, came in at 9:40 this morning, out at 15:45.75 out there? Only time will tell, but this helps you to identify. Using candlesticks will absolutely help you to identify, as well as the relative strength indicator and any other tools that you might use out there. But you want to just make sure you've got the candlesticks going along with you. They'll help you to identify where the reversals may be taking place. Let's switch over to the 30-minute charts out here. And on the 30-minute charts, no real, again, on 30-minute chart, no real bullish candle configuration, at least either multiple or single candle configurations inside. There was certainly on the 10-minute charts, but not on the 30-minute. Let's put the 30-minute chart back here on the ES Mini as well. Give me a second to do that. There we go. Now, in the case of the euro, and this is one to be paying attention to, what we want to note, so one of the differentiations, if we take a look at the euro here, you can see on the 30-minute chart, putting in that 13 count, that TD 13 count, just as making a low at 10 o'clock. What you can see here, you wouldn't be really out of any kind of woods inside the euro until you get through this body here. And what we're taking a look at, give me draw the line across the, that's the wrong line. There we go. And so right now we can see the euro doing while it's working off on the 30-minute chart, that oversold level. We can see it's still just traveling with inside this body. So not a lot of conviction. And that was the last red body down here, and that was coming into the 9:30 session. So in this case here, you would have a continuation pattern if you see a close below the 12763 level on the euro-US dollar on the 30-minute chart. 877-927-6648. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks, to Full Moon Wednesday here at TFNN.com. Stay tuned because we've got Basil Chapman coming up next. After Basil, we're going to go to our astronaut in the sky, Larry Pesavento. Lots of things going on in the skies, not just the full moon this week being the final set of planetary conjunctions, where we have within a 1 week time period several conjunctions taking place. We had those in the middle of February, from February the 4th. Actually, the early part of February, I should say, February 4th through the 12th out there. We then had another set come in March the 4th through the 8th, and the final set for 2013 coming in between March 22nd and March the 29th out there. Oftentimes these these are slower areas, but they oftentimes mark either significant highs or lows in the marketplace. If we're taking a look at the New York Stock Exchange, it has done a 0.786 retracement off of its highs being October of 2007 as well, all the way down to the March lows. The actual 0.786 number is 9,059.23. Right now, the New York Stock Exchange trading out at 9,034. It has been up to a high of 91.28. Let's see, what else do we have going on up in the skies here? Let's see, it is March, the 27th? March 27th. Let's see here. Do we have March 29th. No, nothing else to report on here. Oh, March 27th, you've got Mars is square Pluto today. Jupiter is square Chiron. For all of you astrologers out there in the marketplace. Let's go take a look here. Let's go look at some of the other currency pairs. We just focused in on the mother, which was the euro here. And again, the euro not really bouncing just yet. And take a look at the 30-minute chart, just a kind of a stall program out here. But let's go take a look at the other currencies, because clearly there are other patterns out here. Let's go take a look at the Great British Pound. Great British Pound, what a thing of beauty with regard to patterns out here. The most recent pattern that it formed was a 3 drive to a top. This is the 60-minute chart that I've got on my screen. This thing is full of patterns, just beautiful Gartley buys that turn into butterfly or Gartley cells that turn into butterfly buys, that turn into Gartley cells and butterfly buys. I mean, it's a beautiful thing. But the last pattern out here that completed, and really, you talk about ideally with regard to time. I'll go ahead and put my time tool on here so you can see that going across the screen. The first drive was at 10 o'clock on March the 7th out there. That's your first drive. Your second drive coming in right here at 10 a.m. on March the 15th. And if not really right on cue, the last drive coming in last night at about 1 o'clock in the morning. It peaked just a few bars earlier. 3 drive to, was it not last night? Yeah, yesterday morning. It was the morning of the 24th out there. So really a nice 3 drive to a top pattern. I suspect that what that will do, just as it has in the past, that will set up a new a Gartley buy pattern. Right now that looks like right around the 150 level, 149-ish or so. Just simply need to wait for the bulls to come in. If we take a look at the 60-minute chart here on its move down, I'm not seeing any real bullish signs, and that's on the Great British Pound. As long as we're in the currencies, let's go take a look at the our friend the yen. Let's go see. The yen has a 60-minute chart as well, pattern that looks to be setting up. What we can see here, and this is the one we showed yesterday, that was the 0.618 Gartley buy pattern, somewhere right around 93.11. You can see it also formed a Gartley sell pattern coming into about the 1 a.m. time frame yesterday. So, folks, stay tuned. Basil Chapman will be up next, and always remember that you have an amazing power within yourself, and that power is so strong it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but most of all, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great day, folks. Look forward to seeing you tomorrow. Take care.